Silas,
Yes.
welcome back to BizInfo Africa.
Yeah.
So today I want to talk to you about debunking the risk premium of Africa. Now, this is something that you brought up to me, and I thought it was very interesting.
Yeah.
I had a look at the source of that information,
Yeah.
and I thought it would be good for you to share.
Yeah.
Do our level best in debunking this myth.
Yeah.
So, according to Dr. Adesina, who is the president and chair of the boards for the directors of the African Development Bank Group,
Former. Yes.
rather,
Yeah.
he was speaking at a panel entitled "The New Economic Revolution: An African Perspective."
Yeah.
So this was in February of 2025. And he cited a striking piece of information that turns the conventional wisdom on its head.
Yes.
And what he highlights is that there's a significant disparity between perceived and actual investment risks in Africa, citing a 1.7 loss rate compared to 13% in Latin America.
Yeah.
So how do you interpret this data in the context of global investment perceptions for Africa?
I think the global conversation about Africa has always been misconstrued, misrepresented, and miscommunicated.
Yes.
And to a large extent, what the former AfDB president outlined is just we don't ask important questions. We don't dig deep into understanding the African dynamics of trade. And if you look at the risk factor of trading in Africa, it's significantly minimal, right? But the perception that has always been built around working or trading in Africa has always been projected as a very high risk market to trade. But the question that Dr. Adesina is posing to us is that a fact or is that a myth? And the fact is that Africa is less risky to trade, right? And he wants people to have a robust conversation around what are the levers that are making Africa a less risk as opposed to Latin America. So why are we perceived as high risk? And are we looking at Africa in totality? Are we looking at Africa perception from pockets of, regions that have strife? Because in the risk matrix of things, when you're doing a calculation on risk, you look at what outweighs the other. I think the coups and the wars outweigh the benefits of Africa as a less risky market. And I think that's what the perception is out there. But Adesina is coming back to us and telling us, if you remove the war from the equation, what are you left with? You're left with a robust trading ecosystem that has not been potentially, explored. Yeah. And I think that is the conversation that he's posing to us. Yeah.
Maybe expand a little bit on this persistent narrative and how can we effectively address them? This narrative that Africa is high risk, despite this data.
Yeah.
And as you've mentioned, it is if we look at that data, we're looking at the outliers. The outliers would be the countries where there's war, where there's strife.
Yeah.
I think that is what has been blasted out there.
Yeah.
And it perpetuates that perception of high risk, especially from the, I don't know if you want to say casual investor. So we're not looking at the multinationals. So if you're looking at someone who just wants to open up a business, a mom and pop business in Africa from those other markets.
I think the good question that the good doctor is posing to us, what is the appetite of recalibrating our risk modeling when you're evaluating Africa as a destination to invest? And this is not a question for Africans to answer, but a question for investors to answer. What are the risk models they're using to look at Africa as whether it's a profitable or whether it's a risk-averse market or it's a place where they can put their bet. There are quite a number of people who have really betted on Africa and they've made their kill. They've made their good money out here. And I think those become more of a case studies of course, every market has its own challenges, right? We operate in a space where I wouldn't say it would be easy for someone to run their business without challenges. And equally, even in the Asian and even in the European markets, the same thing. But the way the African challenges have been projected out there from a trade perspective, they look as if it's a grim, it's a grim experience. It goes back to financial institutions, to venture capitalists, to angel investors, all these people that have money. What are the risk models they're using to look at Africa? Perhaps it's a high time they start reworking on those risk models so that they look at Africa from a totally different perspective. The good stories that are coming out of the continent, if you go to West Africa right now, there's an upsurge of sovereignty that is opening up trade. So, for example, in the Sahel region, you're looking at, the quote-unquote junta regimes that are propping up new ways of trading. Yeah, it's people call it bloodless coup or whatever it is, but for me, I look at it as an economic coup, right? It's an economic coup of some sort because bloodless coup is what the Western world wants you to look at. But if you look at it in its essence, it's an economic coup because when you get rid of the French and you start becoming self-reliant, that's an economic coup, right? When you start having conversation about nationalizing of your resources, that's an economic coup, right? I don't even want to use the word coup because coup is also very, it's a derogatory word to use in this case. And that's how Africa has been projected over the years. The economic emancipation, I'll use the word emancipation that is currently happening in West Africa, is a wake-up call to many other regions. Recently, you've seen the president of Botswana getting on board, nationalizing the resources, the minerals, providing guidance in terms of how they're going to use their resources. Ghana has followed suit. There's a level of renaissance that is happening that, if you ask me, any angel or any investor should start relooking at recalibrating their risk modeling and look at emancipation of Africa as it is right now and what are the gains that they tend to get from what currently is happening. I don't think this is, people will say this was a passing cloud. I doubt it's a passing cloud. We are getting into enchanted waters, and especially in regions that predominantly have been projected as violent and have been projected as unstable. Of course, for the reasons known to the people who control media and how they would want to tell our stories. So there's a shift of that. So it's economic emancipation as opposed to economic coup. Yeah.
So maybe let's expound a little bit more on the role of narrative in investment decisions. So let's pick Tony
Elumelu Foundation.
Yes.
Yeah,
so Tony Elumelu offers, he says that Africa offers unparalleled returns on investment.
Yeah.
And you, in your experience, because I know you've traveled this continent.
Yeah.
How do you see narrative influencing investor decisions, and what strategies can reshape these strategies to reflect Africa's true potential?
Yeah, great. You've used Tony as a case study because he's doing quite a lot. If you follow through his journey towards being whatever he is, and you'll understand the pitfalls that he had to go through. At some point, I think he had to get out of UBA Bank as a director because of corporate challenges or corporate governance issues. But he transitioned into the foundation, and Tony Elumelu's foundation has done quite a lot. It has provided opportunities for innovators, young innovators, and is riding on the upside of the youth workforce, right? That currently Africa is enjoying. One thing that we need to remember that it's a seasonal phase where we're going to enjoy the youthful, human resource capital, but at some point it's going to go away. The question is, how do we harness all this youthfulness workforce to the benefit of the growing of the African trade? Tony Elumelu Foundation, and I know even there's Strive Masiwa Foundation, I know Daliko Angote Foundation. These are guys that are pioneers in the African emancipation or renaissance that are providing us with a new breath of life on how to look at how we can be self-sustained in terms of our innovation, in terms of our trading, in terms of the interactions that we have on a day-to-day basis. Those are stories that you'll never see being projected out here as the first point of reference, about Africa. Again, whoever controls the communication channels is whoever controls the narrative. The algorithms that have been built around Africa have always been about strife, they've always been about wars, they've always been about, poverty. It's a bigger war than just an economic war. It's a war of the mind. It's a battle of perception. It's a battle of getting us to a point where we value ourselves and actually know the potential we have as a people of this continent. Yes.
So to that, maybe we can speak about institutional initiatives and their impact. So, for example, the African Development Bank plans to establish an Africa Investment Guarantee Agency.
Yes.
To mitigate various risks.
Yes.
So how do you see this initiative and any other initiatives that you've come across playing an influence in investor confidence and actual investment flows into the continent? Rather, not even flows into the continent, how does it also stimulate investment from within the continent? Yes.
Yeah, I think when you mention about guarantee funds, it's timely, if you ask me, because over the years, the traditional models of banking have always favored the capitalistic environment. But the guarantee funds are coming to cushion quite a lot of, areas that traditionally would not be able to access credit for whatever reasons. Africa as a continent is an SME continent, right? Let me just put it clear. It's an SME continent, and that's at a micro level, cumulatively. Then how do you deal with an SME continent? Remember, land in African tradition is a factor of production. Most financial institutions have been designed to look at, which for me I look at it as a very colonial way of doing transacting. Yeah, it's a punitive colonial way of dealing with, risk, if you ask me. So guarantee funds are coming to cushion a bit of those risks, and they're telling entrepreneurs who are coming into the market and also financial ecosystems that are out there that, look, can we relook into how we can catalyze the SMEs in this market or the businesses in this market? Where are we able to absorb a certain level of risk, and be able to allow businesses to thrive and provide affordable credit for that matter, or access to financial products and financial credit becomes easy and becomes easily accessible, and that way it catalyzes the African trade ecosystem. So remember, all traditional banking systems were colonial. You look at British, you look at Barclays Bank.
Barclays.
I don't know whether Standard Chartered. All of them are colonial, and they're still imprinted in the old ways of dealing with us as businesses, which was very primitive. There's a new shift. There's a new way of doing business that I totally don't, as a business, I don't need tangibility of proof that I can transact, right? internet and access to, you know, digital channels and platforms and tools has opened up a new ecosystem of entrepreneurs, which we pride in as young and youthful. They're not owning factors of production like land. They don't own assets, but they have digital assets. So how do you risk digital assets, right? And be able to provide credit to, or extend credit to some of these businesses that are emerging. Yeah, yeah.
Something that is also within the zeitgeist is the African Continental Free Trade Area.
Yeah.
So they're saying it offers a 3.4 trillion market.
Yes, it does.
So what role do you see regional integration playing in altering investment perceptions and realities? How does this catalyze businesses within the various jurisdictions in Africa trading with each other and taking advantage of this framework?
I think if you ask me, African, it's called African
AfCFTA.
AfCFTA.
Yes.
Yeah, AfCFTA. I think if you ask me, there was goodwill on paper, but not in the actual execution of what needed to happen.
Implementation.
And I think we've lost great opportunity, right? Currently, there is a crisis at a global scale that will at some point force us to start thinking critical inward. The Middle East is now at war. Eastern Europe is at war. Okay? What does that tell us? It tells us that we have an opportunity to relook into serious trading opportunities that we have. Because the other day, I was listening through what is happening in the Middle East, and the Iranians were threatening to disrupt the flow of traffic of ships, you know, that bring goods and products to the African continent and the larger part of Eastern Europe. What does that essentially mean? It essentially means that when that happens, definitely there's a trickle-down effect, rather a ripple effect, to how we price, what we price, the goods that we are able to consume and those we can't consume. Because remember, Africa predominantly is a net importer of Asia and European products.
That's right.
An opportunity has presented itself right now, and there's need to be a policy shift into really emphasizing on the importance of trading inwards. When I say it was a goodwill on paper and not on implementation, I've not seen Africa Union or whoever bodies out there coming out strongly to push, you know, the implementation of it. I remember there was a time there was a stalemate about who has signed up on that policy that is going to open up trade. I remember Kenya was one of the first guys who signed, and Ghana. I don't know how many what statistics have shown about trading between the two countries at the moment. It's a wait and see. The other challenges of that trade AfCFTA is that our infrastructure.
Yes.
We don't have a very solid infrastructure to open up trade routes, right? I remember there's been a conversation about a Trans-African highway that is running all the way from Cape Town to Morocco, and then another one that is running all the way from the eastern side to western side. There's also a conversation about a rail system, you know, that cuts through Africa as a continent. The infrastructure currently, the way it is positioned, is not helping actualization of AfCFTA, right? And these are some of the hard conversations that Africa Union and even AfDB as a donor, or rather, as a financial institution that handles large-scale projects, need to start relooking into. Because if you were to build a strong ecosystem around trade, you can't build it on air. the infrastructure has to be sound to allow trade to happen. Yes. Then there is the common trading currency. That conversation is timely right now. And I'm saying these things with all due respect because of currently what is happening at a global scale, right? Because if we snooze on this one, we are never going to recover. It's the right opportunity to have a common currency trading across the different markets, or even if it's not common, we have two currencies that are predominant for trade that are acceptable. For example, Europe has the euro, the British have the pound. They can still trade on both. It doesn't take away anything. But what is the African currency for us to universally trade with it? Yeah, so those are my reflections around that. Yeah.
Okay. So let's talk about harnessing Africa's demographic and resource potential. So Africa has a youthful population and rich mineral resources, and it positions it uniquely within the global landscape. So how can these assets be leveraged to shift continent from a perceived risk to a recognized opportunity?
Yeah.
Yes. So maybe you can even talk about Burkina Faso with what they're doing with their resources as a reflection.
Yeah.
But go ahead, tell us your perspective in terms of those areas.
I think it sits in well with what governments are revising, especially mineral driven economies. They have realized that we equally are able to, or rather, if we are to generate jobs for the current demographic we have in the country, we have to create industries that are able to do that. Okay? And by creating industry is actually value adding on currently what is within our resources. And that's what the Burkina Faso is trying to do. Burkina Faso said instead of shipping our gold to go out to be smelted somewhere else, we can do it ourselves. And we export a complete product. Yeah.
Exactly.
To maximize revenue. And from that, we're able to do what? We're able to trickle that money to the farmer at the village level to input, to help them input on their farm inputs, buy fertilizer for them and all those things. Subsidize everything that goes down there. So that's the harnessing that currently has started happening. And I've seen also Ghana has decided to do equally the same. I know Rwanda has a gold smelting farm where they're able to do value addition and they're able to send complete products out there. Other markets are coming on board. For example, I think Botswana opened up one of I think recently, I don't know whether they opened or took up a diamond refinery plant that is now going to do what is now going to be refining their diamonds themselves and then putting out there for export, as opposed to sending raw materials or raw products. One of the things that I would want to say here, there's a lot of caution around that because we always are looking at trade, but then the outside world looks at us as a risk into what they have heavily dependent on for the longest time as colonialists. When that is taken away from them, I've had this conversation about French feels it's going to be destabilized if it can't access minerals from Africa. And you ask yourself, whose problem is that? That's not our problem. It's their problem in finding a way of having a stable country. The overdependence on the donor funding, and this happened when USAID pulled the plug, right, is another opportunity because right now as I speak, Africa has been presented with so many opportunities to self-sustain.
To look inwards, yes.
To look inwards. So when that happened, it was a wake-up call because innovation, rather, so health, because USAID was heavily on social impact programs. And you find they used to fund quite a lot of government projects. As opposed to now governments looking at donor aid, can they relook into their budget lines and start refocusing on what is important? For example, health, education, and housing as very critical areas to put their taxes on. I know USAID used to have a very huge budget with government, and used to fund so many projects. And I think that's across Africa. It's not only Kenya. Across Africa, that's what they used to do. It is a wait and see on how governments are going to recalibrate that. But the opportunity should not be missed right now for self-sustenance and self-governance. Yeah, because once we do that, we go to the negotiating table as equal partners.
Yes.
Yeah, at a global stage, right? Because it's no longer depending on what you give me for me to trade with you. It's pretty much when I have this, what do you give me in return of this?
Yes.